Hello, Paul Gerard from Price Accounting Services, and welcome to this video which looks at the new and revised manner of ruling relating to tax residency for inbound and outbound persons for Australia. So I think it's an important point to indicate at this juncture that the ATO had a draft ruling in respect of tax residency, and this is now finalised as of June 2023. Tax ruling TR 2023/1 is considered a final ruling. Now, if we visit the old views and this new ruling, what the purpose of the ruling is to address modern approaches to how people move around and live in different places, compared to, say, the old traditional view in the 70s, etc., where people went overseas on a holiday or they moved. There was no nomadic lifestyle as such, okay? So it was pretty common to find that because the duration of time it took to travel overseas, for example, Australia, UK, could take a lot longer than it does now, where we now have direct flights. So people didn't move around as much. They went overseas for a holiday, they moved overseas, and there wasn't a lot of grey area in between. The ATO's revised approach tries to look at a more modern view and address that as people work in a global economy. Okay, so what's changed, what's new? Well, I'm not going to go into the details as such. I just want to make this an overview because every situation is going to be different. But effectively, there's both inbound and outbound, and there are different tests that apply to each. And that's really important. So, for example, if you look at the online ATO residency calculator, there are two different calculators, and it's not uncommon to find someone makes an incorrect assumption and uses the wrong one. I've had plenty of people say, oh, I'm leaving Australia, therefore the 183-day resides test applies. And you go, well, no, it's a different test. So, two different calculators. The other key issue with these issues is the impact of common law. So, court decisions have previously been made which look at the application of an understanding of what it means to reside, what it means by permanent. For example, tax law says tax residency, blah, blah, blah. Somebody departs Australia permanently. Well, does that mean forever? No, it doesn't. Well, what period of what duration of time might apply? And the courts have previously considered maybe a 2-year period is fairly common, but that doesn't mean you get a free kick for 2 years and then you get to change after that. So there's complications to the factor. So there's also the need to isolate and consider a key issue many taxpayers fail to consider, and that is citizenship. Citizenship is not a factor in tax residency. There are only 2 countries in the world which operate on a taxation basis that considers citizenship, and that is the United States and the country of Eritrea. So many people will say, well, but I'm an Australian citizen. It's got no relevance to tax law, okay? However, a person who is an Australian citizen might need to consider whether they have departed Australia permanently, and the issue of visas might come into play. So, for example, John might depart Australia intending to work in the oil fields of Saudi Arabia, and he has a working visa, and it's a 4-year initial contract engagement, and then you must consider, has he departed Australia permanently? Now, based on that simple information, I would argue no, he has not, because he has not emigrated to Saudi Arabia. He only has a right to work and reside there. So Australian tax residency may prevail, and he might be subject to income tax on what otherwise might be tax-free income. Then we've also got to look further and consider his family arrangements. For example, we now know that he has a wife and 2 children, live in Melbourne, and the kids are continuing to attend schools, his home has been retained, so he hasn't really departed Australia permanently in any event, okay? So these are factors that complicate it. And then there are some statutory tests imposed under this rule, or this ruling, which all taxpayers may need to consider. So my view is this: I don't like to bog down and consider a one-size-fits-all shoe arrangement that says, here are the rules, okay? I believe it's important to consider the individual's personal circumstances and to give advice based on that. So we welcome those questions if you're planning on leaving Australia for any duration to determine whether there is a change of tax residency, and in some cases it might be necessary for a private ruling to the ATO based on that, okay? Because it might not be clear-cut, particularly if we're talking about that 2-year rule and your intention is to depart for at least 2 years. That might be a tick to change of tax residency, but it depends on how you arrive in the other country and why you're there and all sorts of other things, so, and personal circumstances. So my answer is, go, just give us a call, email us, and then we'll have that discussion. We also then need to advise, based on that decision, or whether you are or not a resident, on how does that affect your income tax-wise. For example, a person who ceases to be a tax resident of Australia might have complications with trusts, companies, and super funds, that self-managed super fund that they operate and have already. It may also affect capital gains tax, because there are CGT events that can be chosen or might be imposed by law, so it's important to understand what they are. And then even a simple matter as considering sale of your house. So I'm going to use the example of John and Josephine. They've lived in their home for 10 years, and he's accepted a role in the United States, and he expects to work there for 5, maybe 10 years. And eventually on retirement might return to Australia, is likely to return to Australia. So it's quite probable he has become non-resident on his departure, where let's say his colleague is going over there maybe a year or 2. I'll see how it goes after the 2 years. I might sign on for further. He might not, his intention might be uncertain at the point of departure, and so he might retain Australian residency until he makes a decision to apply for that permanent residency and right to reside and continue to work in the United States. So yeah, every situation is going to be different. So get on the phone, give us a call, and we've got to be concerned with CGT on the family home. So John and Josephine's home could, let's say it's on the market, they depart Sydney Airport, arrive in New York, 3 days later, somebody says, I'll buy your house. That's a CGT event, and unfortunately with the change of tax residency on departure, it could mean that all past main residence exemption is lost and the property will not be subject to any exemptions at all, and full CGT on its original purchase price. Really fatal. So wise to get advice. So I hope that's been simple enough and clear enough to indicate it's really a case of personal advice, but wanted to make you aware of the tax residency changes so that if you are planning on move, you can get in early and seek the right sort of advice. So hope that's been helpful. Thank you for watching, and we look forward to you watching another video another time. Bye for now.